Welcome back to the channel, everyone. Today I want to expose the average salary that's paid by Citadel in the UK and in Europe. And I also want to give a bit of an update on the Citadel situation that's been going on Twitter. And I also want to talk about and analyse and give you some updates on Evergrande and how the crash is closer than you might have expected. So stay tuned and let's make some money. But before I dive into the video, I just want to give a massive shout out to the 5,000 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, Finance Lancelot tweeted saying Bear Stearns is fine. As you can see, Wall Street banks have been questioned by the Fed about their Evergrande exposure. And also Hong Kong and the CCP has also asked banks to report their exposure to troubled Evergrande. So therefore, at the moment, the Fed and the CCP are saying that the Evergrande situation is fine and it's not going to spread. But the Fed and the CCP don't even know the true exposure that both Chinese banks and Wall Street or American banks actually have. As I spoke about in one of my videos a few days ago, I think their true exposure is a lot higher than what's reported in the pure bond interest. They're also going to issue CDSs or credit default swaps on those bonds and potentially even synthetic CDOs made up of those CDSs that they sold. I showed you a clip from The Big Short where the market for CDSs and synthetic CDOs is up to 50 times as big as the pure bond market. Now we've also got some articles from Bloomberg about Evergrande. Evergrande bond bills are piling up as the latest coupon comes due, and this happened today on Wednesday. Evergrande has $45.2 million in interest due on September 29th on yet another bond note. And contagion fears send junk bond yields to highest in decades. But interestingly, the Evergrande stock has been going up as if they're recovering. And this is exactly like in The Big Short when the housing market was falling and getting absolutely crushed, but yet mortgage-backed securities were still going up and credit default swaps were actually going down as well. China Evergrande Group is facing another bond interest payment after giving no sign that it had paid a separate one last week, as its deepening debt crisis looms over global markets. The world's most indebted developer needs to pay a $45.2 million coupon on Wednesday for a dollar bond, as in a bond that's held by US institutions, that matures in 2024. Evergrande has made no public statement on an $83.5 million coupon that was due September 23rd, and at least several holders had said they hadn't yet received payment. And at the same time, many of those bondholders that hold the September 23rd bond are also likely to be also holding the September 29th bond. Investors are scrutinising Evergrande's imminent debt obligations as regulators urge the real estate developer to avoid a near-term default and communicate with bondholders. I think the fact that Evergrande isn't even communicating with their bondholders just shows actually how stuffed they really are. I personally don't think there's any chance they can avoid this near-term default and make their bond payments, and I also don't think the CCP is going to come to the rescue either. The CCP will bail out the onshore bonds and make sure that Chinese residents get their money back, but they won't care for the US bonds. And also, Bloomberg reported that Evergrande has had its rating cut by Fitch on likely missed payments. Fitch cut ratings to C from CC, one notch above default level. We can see that Fitch go all the way from AAA down to A-, BBB+, down to B-, CCC+ down to singular C, and then into D, which is default. And also separately, some holders of a bond issued by a company called Jumbo Fortune Enterprises are forming a committee to press their claims in the event of a default because they maintain that Evergrande is also a guarantor of that debt as well. Therefore, it looks like Evergrande even has debt and bonds that aren't even in the name of Evergrande, but probably in the name of a separate subsidiary. And the major problem that this is going to cause is the spread from Evergrande to other Chinese property developers. Evergrande crisis highlights funding risk for other Chinese developers. Firms including Fantasia and Yuzu have seen their bonds sink, and actually the Fantasia stock was just halted out on the Hong Kong Stock Exchange. And currently the Chinese property industry is being squeezed or squozed by housing curbs and deleveraging. And this sentence here really explains why the Chinese market is so screwed at the moment. Strict rules on leverage means companies need to reduce debt, while measures to cool the housing market are damping sales. Therefore, these Chinese property developers need to pay off their debt and get their gearing ratios down so they can take out more loans and get more cash, but they can't even sell properties at the moment to get cash in to pay off those loans. Therefore, it's just a never-ending cycle at the moment of needing cash to pay off those loans, but not being able to sell any properties so they can't get any cash. Bloomberg then listed a number of Chinese property developers with some of the weakest returns this year in a Bloomberg index of Chinese high-yield dollar bonds. But interestingly, it has left out some of the largest Chinese property developers, which could also be impacted by the exact same problem. Believe it or not, I actually wouldn't have even been able to find this article if it wasn't for my favourite magazine subscription service, Readly. Readly have over 5,000 unique magazine titles available directly from your phone. And Readly is useful for me because it's kept constantly up to date with all of the new releases, and therefore I can find brand new articles like the one I've been talking about today for you guys as soon as they're released. My favourite magazine on Readly is Bloomberg, but I also regularly read Forbes, Entrepreneur, and even Design, Buy, Build when I'm looking for new ideas around the house. I think the best thing about Readly is all of their amazing features. You can bookmark pages just like you can with real magazines, but you don't have to have hundreds of discarded magazines laying around the house, which is great for me because I hate the clutter. And you can even filter their giant library of magazines and newspapers by category to find some new magazines you might like but haven't yet come across, and therefore it's brilliant if you've got some spare time and want to discover some new magazines. So if you want to have all of your magazine subscriptions managed in one place, then be sure to check out the link down in the description below, as I've managed to secure you all a 2-month subscription to Readly for free. After the 2-month period, it's £7.99 a month, but you can cancel any time. And the sign-up process is also super easy. Just sign up using the link below, download Readly from the Apple or Android store, log in, and away you go. Now, eFinancial Careers have just made a post about Citadel Securities' salaries and bonuses being enormous. Citadel Securities, the market-making firm founded by Ken Griffin, is a privately held company for which information isn't freely available. Nonetheless, Bloomberg reported in January that Citadel Securities earned $6.7 billion in revenues globally in 2020 and made a record $4.1 billion in earnings before interest, taxes, depreciation and amortization. In the UK, Citadel Securities Europe is obliged to register its accounts with Companies House. Accounts just released for the firm in 2020 revealed that its total income in Europe last year was $348 million. The average combined salary and bonus paid to Citadel Securities is 136 European staff, which is also disclosed in these publicly available accounts in 2020, was $683,000 being the average combined salary and bonus. So basically the average employee at Citadel in the UK or in Europe got $683,000 a year. Obviously there's going to be some newer employees earning less and some more senior employees earning more, but that is not a bad average wage whatsoever. And it's up from $659,000 a year last year, so a $30,000 pay rise. And a competitor firm, Jane Street, paid even more generously in London last year at an average of $1.3 million per head. And I imagine this is why Citadel get away with so much, because they pay their employees so much money that they don't go to the SEC and tell them what Citadel are really doing. Now I have to admit, unfortunately Citadel haven't offered me $683,000 a year to become a shill and spread FUD, so unfortunately no FUD for me. Now yesterday we saw Citadel post some tweets that were very, very carefully constructed by their legal team, but today and last night, not quite so much. There are those who still refuse to believe an American landed on the moon. Internet conspiracies and Twitter mobs try to ignore the facts, but the fact is that Citadel Securities was the preeminent market maker to the retail brokerage community in January 2021. On January 27th, numerous retail brokerage firms imposed restrictions on the trading of certain meme stocks due to capital constraints, liquidity concerns, and other commercial reasons. Citadel Securities never requested, intimidated, agreed or otherwise sought to limit or to restrict the trading of such securities. On January 27th, we executed an astonishing 7.4 billion shares on behalf of retail investors. Now I wonder how many shares they executed on January the 28th. Probably a whole lot less, as the 28th is the real day that buying was halted on AMC and GameStop. not on January 27th. We are proud of the important role we have long played in making US financial markets fair, transparent, resilient, and the envy of the world. Conspiracy theorists and plaintiffs' lawyers are trying to concoct an absurd story from regular way communications among Citadel Securities and the brokers who handle orders for retail investors. Of course, the teams at Citadel Securities and our counterparties are in constant communication to meet the needs of the retail investor community. Against the backdrop of a global pandemic, amid an unprecedented surge in retail trading engagement, our respective teams made sure the operational demands were addressed and the retail investors had access to Citadel Securities' superior execution capabilities. Now, I find it very, very interesting that Citadel went so long, nearly 9 months without a single tweet, and then to tweet so many times in the last few days. It almost seems like they're trying to cover something up. Because at the end of the day, if you know you're not guilty and you know you've not done something, you don't get all upset when people post about it. You just ignore it and stay in your own lane. When someone gets all defensive and keyboard happy about it, it usually means they've done something wrong. And that's exactly what Dave said. Bro, is Ken Griffin literally tweeting from his phone to the Citadel Securities Twitter feed right now? This language is highly emotional, coming from a business's Twitter account. Wow. And there's also just been some new leaks from the law case that imply Citadel was in direct contact with Robinhood on the 28th of January regarding restricting the sale of AMC and GameStop. And this is why Ken and Citadel are so specific about how they've done nothing wrong on the 27th and didn't mention anything on the 28th. Reminder that the buy button was removed on the 28th, not the 27th. And it looks like high-level executives of Citadel Securities and Robinhood coordinated communications in the weeks before, and numerous times the day before the restrictions were ultimately imposed. Additionally, Robinhood appeared to accept Citadel Securities' proposition made on January 20th, 2021. And high-level employees of E-Trade and Citadel Securities exchanged communications through January 28th and not on the 27th. And Citadel even went to the extent to get a Bloomberg article written to deny any potential wrongdoing. I personally just think this just makes them even more guilty. Guys, be sure to let me know down in the comments below what you think about the average salary paid by Citadel and what you think about their mass rampage of tweets. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.